Guys, 3 stocks at 52-week lows: Applied Materials, CSX Corp, and Ford Motor Company. Let's go see how they look using our stock analyzer tools and our 8-pillar process. If you have the software, please follow along. If you're new to our channel, I'm Paul. I'm here to teach value investing because I believe the more you learn, the less you will fear. And I also like to call out the fraudsters out there on the internet. So first stock, let's go to Applied Materials. We go to our stock search, type in AMAT, go over here, and let's go. So look at the stock price here. So 1 year ago, in the last year, it hit 167, hit a low of $86 very recently. Now it's at 89. So it's a little higher than its all-time, this 1 year low. Let's go to the 8 pillars immediately. Oh, wow. 8-pillar stock right here, guys. This is pretty interesting. So all check marks across the board. I like the fact that the PE and the price of free cash flow are very close to each other. They're buying back shares. Now, I will say, if they're half off their 52-week high, they were buying back shares when they were expensive. I don't necessarily like that. It's not a good use of capital. That's kind of like the management things I don't like seeing, but very low debt, only 1.9 times their 5-year free cash flow. And to go back down here, their 5-year average free cash flow is $3.75 billion. Now, one thing I want you to keep in mind, this is a company that's in the chip sector, and that has seen a very big surge in the last year. You cannot extrapolate last year onto the future. Just like if it was the Pfizer COVID vaccine, COVID's not going to be a vaccine that's going to be used indefinitely, in my opinion. So be cautious when looking at Applied Materials. So let's go to the stock analyzer tool. We use the stock analyzer tool as a way of taking our assumptions about the future and telling us what price to pay for the stock today based on that. So we're going to stock analyzer tool. Now, in the last 10 years, the revenue's grown 14%, 10% in the last 5 years, and 25% in the last year. My goal is to make very conservative assumptions and buy stocks that fall under that conservative assumption. So I'm going to go to 4, 7, and 10% revenue growth. Profit margin, again, really high. Oh, somebody sent me a message. Profit margin is very high in the last year, but I'm going to focus on these 2 profit margins. So I'm going to go 17, 19, and 21. Free cash flow margin, 17, 19, and 21. Now, PE. Very low PE, guys, 11.6, driven by the big profit last year. But I'm going to do profit margin of PE of 13, 15, and 17, and same with the free cash flow. Now, guys, keep in mind, I think it's possible that their revenue drops in the next year because they saw such a big surge recently. This does not factor that in there. So when it comes to my desired return, I usually put in 12.5%. I'm actually going to go a little bit higher here, because I got to wonder if there's going to be a drop in revenue here coming up. So I'm going to put 15% return in here. I'm going to hit the analyze button. $89 stock, scroll down. All right. So we have a low of 50, a high of 111, and we're pretty close to that $75 middle range. So if you agree with these assumptions above, I strongly encourage you to do more research because this thing's getting very close. And if you have our software, click the plus mark at $75, and the software will notify you on our watch list through email and through text through the app when the stock has hit that price. So then you can go in there and make your decision what you're going to do. Stock number 2, CSX Corp. So let's go back to the 8-pillar search, CSX. Click on it. Okay, stock hit a high of $38 and a low this year of $28. It's currently at $28.50, so it's very close. It's a railway company, so it's probably gonna be a lot more consistent. Let's go to the 8 pillars. Ooh, a lot of shares here, a lot of issues here. Double shares outstanding, over double. People keep tagging me in their messages. Low ROIC, lower net income, higher free cash. So when I see a lower net income but higher free cash flow, there's probably some sort of accounting thing happening that changes that. I'd prefer to see it that way than the other way around. I want to see free cash flow be at least as good, if not better, or right there with net income. Because over long periods of time, free cash flow and net income should be about the same. So there's a lot of red flags here. What do you want to do here? What do you want to do here? Well, let's go to stock analyzer tool. Now, one thing I'll say about the train business, it relies on the economy. Warren Buffett always talks about one of the things he looks at to see where the economy is going is how many trains are being filled on a, basis, weekly, monthly, daily basis. He looks at because if people are shipping goods, they're buying goods, the economy is probably doing well. So we're back on the stock analyzer tool for CSX. Now, guys, look at this revenue jump in the last year, 24.5%. So what I'm going to do is I'm actually going to factor in a very, very low, because the last 10 years was 1.2%, and that included their revenue growth of 24.5% last year. So I'm going to go -2, 0, and 2%. Profit margin, I'm going to do 22, 25, and 28. Free cash flow margin, 15, 18, and 21. PE, 12, 14, and 16, 12, 14, and 16. And I'm going to do a 15% return again because I'm really worried if we enter a recession and with how much surge we had in shipping and everything like that, they really got to dictate their price. I'm going to hit the analyze button. The stock is currently at 28 bucks. Yeah, this is about what I expected. A low of under 10, a high of teens, mid-teens, and a middle range around 10 bucks. That seems insane, but remember, guys, this is a company that had revenue jump of 24.5%, and it still then only made the last 10 years positive for revenue growth over a 10-year period. That is a problem. You have to assume that the same is going to happen. If it wasn't for this fluke year, they would have lost revenue over the last 10 years. So keep that in mind. Pillar number 3, Ford Motor Company. Now, guys, if you've watched our channel before, you know I'm not a huge fan of the car business. Too many costs. The unions are a problem. I know you're going to hate me. Go right in the chat below about how dumb I am. I don't get it about unions, blah, 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 blah. But at the end of the day, these costs translate to higher prices for everyone. Okay? And when car companies are forced, I have to take these contracts, when they enter on their own will, it makes it difficult when times are tough. And we're right now at a time in the market where car prices are very high. The average car price was the average new car price was $47,000 last year, a massive increase from the year before. That's a concern of mine. But let's go look at the company and their 8 pillars. So let's go back to the 8 pillar search, type in Ford, a high of 25.87, a low of 11 bucks. It's currently 11.64, 8 pillars. All right. So very low PE and price to free cash flow. But something tells me that there's been a lot of big jump lately. Revenue is down $25 billion. Free cash flow is down $6 billion. Barely any shares, but a lot of debt right here. A lot of debt, 11.5 times. All right. So remember, our stock analyzer tool does not factor in debt when looking at these companies. So let's go here. -2, 0, 2%. Profit margin, 3.25, 3.75, 4.25. Free cash flow margin, I'm going to go with 5. I'm going to go with 4.5, 6, and 7.5. PE, 8, 11, and 14. 8, 11, and 14. And I'm going to do another 15%. This is the first time I've ever done 15% across the board on desired annual return. I just don't think the imminent future of the car business is that great, and you're not getting a screaming deal, I don't think. Well, maybe you are. So look, stock's currently $11.64. The low price of $6 to $9, the high price of $13 to $24, the middle range of $9 to $15. But one thing on this company I want you to make sure you pay attention to, the long-term liability. It's a lot of debt based on their cash flow. That is a concern of mine. So if you like this video, you like this process, please click the link above to learn more about our 8-pillar process. And don't forget to subscribe to the channel. Thank you very much.